The last question which we have done in the previous class was question number 78. So now let's continue further with the next question, which is 79. During a period Claire, this is not CMA class. CMA classes are over, no? Claire, Claire, respond. This is not CMA class. Okay, let's continue. Same question number 79. It says that during a period A Limited has the following budget and actual sales. There are three products, product A, product B, product C. We have sales budget in units, actual sales in units, the standard price per unit, actual price per unit, then budgeted cost per unit, and then actual cost per unit. These are the details which are given. What are we to find out? The question says that to find out the total favorable sales quantity profit variance for the period. Okay. Normally, how do we calculate the quantity variance? The difference in the quantities, the actual quantity, the standard quantity, applicable at the price. Now, if it is a cost variance, wherever it is a cost variance, we either take the material cost variance, we go with the standard price into the difference in the quantities. If it is a labor uh, variance, labor quantity variance, the difference in the labor hours, the standard and actual hours applied at the standard rate. That we see that it is the standard rate per unit, standard rate per hour. Here also it's a quantity variance, but the variance is not about a cost variance, but it is a revenue variance, sales variance. So sales quantity variance, find out the difference between the quantities, the standard quantity, actual quantity. After that, we have to take what is the standard. There is no price here, it is profit. So we would go with profit. How much is standard profit is what we have to see. But here, if we have to go with the standard profit, which one? Because there are three different products, product A, product B, product C. So when there are three different products, so which profit do we have to consider? In that case, we need to find out about what is the average profit per unit, average standard profit per unit rather. So because there are three different products A, B, C. Now the quantities are also mentioned. The budgeted units, sales budgeted units are 3,000, 8,000, 9,000. Then the profits are also the selling price is given, standard selling price is given, standard cost per unit is given. So we also know what is the standard profit. We need to find out the average profit because it's not just one product. It is now here we have three different products. So calculate the weighted average standard profit per unit. Let's start with let's define what is the formula. The formula for sales quantity variance is equal to, that would be standard profit per unit, the difference between the standard quantity minus the actual quantity. So standard profit per unit, which per unit has to be taken. So since there are three different products, we calculate about the average price. So because the quantities are also given, let's calculate it as weighted average standard profit per unit. The standard units are given 3,000, then we have 8,000, then we have 9,000. Okay. After that, we need to know what is the standard profit because directly it is not given. So let's take so it would be find out the weighted profit or the total profit for all the number of units. Let's find out what is the weighted average profit. The total number of units are 20,000. Weighted average profit is equal to we would have it as 34,200 divided by 20,000 total number of units, which is equal to so it's 1.7 per unit. So let's substitute the values here. Sales quantity variance. We need to know what is the total quantity, total standard quantity, total actual quantity. So standard quantity, the total standard quantity is 20,000. Let's also find out what is the actual quantity. Actual units are 23,000 is the actual quantity. Just substitute this in the formula. We have sales quantity variance will be the profit per unit, which is weighted average profit per unit, which is 1.71 into the difference between these two. So 23,000 minus 20,000 or 20,000 minus 23,000. Anyway, you can present it. So that's no issue there. Here is equal to 1.71 into 5130. Is it favorable or adverse? Anyway, it's given as favorable. Why would it be favorable? Because they have ended up selling more number of units than what they have planned to sell. So they plan to sell 20,000 units, but the actual units sold are 23,000. So on that note, it is a favorable variance. The last class we've done one mix problem, sales mix problem. Which one was it? 78 we have done mixed problem. What was the point? The first point what we need to understand is when there are more than one type of ingredient used or input used, that will be in case of mixed variance. More than one type of skill set used, that is labor mixed variance. In case of sales, more than one type of product when it is sold, we would have it as a sales mixed variance. So question number 80 is asking us to calculate what is sales mix profit variance for product B is how much. The details given are PQ produces two products, product B and product C. The following budget and actual data relate to August. So product B, product C. The details are budgeted data is given. Production and sales of product B is 2,200 units. Product C is 1,800. Two different products are sold. Next comes the standard contribution per unit. Standard contribution per unit is $58.59.75. Standard profit per unit is 50 and then 53.75. Then we also have the actual details. Actual number of units are 3,000 for B and 1,500 for C. We'll define what is the sales mix variance. In that case, it will be the standard profit. Standard profit is the criteria. The logic here would be about the standard profit. The standard profit has to be taken, and then we have to apply it for the total number of units of budget and the total number of units of actual. But here the difference between these two has to be taken into consideration. What did we do? Step number one, we need to adjust the budget according to the revised budgeted units if the totals do not match. So let's first put the check this one. The total number of budgeted units are 2,200 and 1,800. Added up together, it will become 4,000. But the actual units which are produced and sold are 3,000 plus 1,500, 4,500. So here then there is a need for us to revise the budgeted figures according to the actual. After that, we need to find out the variance between the budgeted units and the actual units, apply it at the standard profit, then we find out what is the variance. So let's put the formula first. standard profit per unit into the difference in the quantity of budget and actual. Standard units, let's put it as standard units minus actual units. It is a mix, so we need to take them as a mix. The products are two different products are there. Product, we have B, we have C. Okay. The units are, sorry, the standard units are 2,200. After that we have 1,800. Actual units are 3,000. Then we have 1,500. Just add them up. Both of them do not match with each other. The total of standard is 4,000. Total of actual is 4,500. So here we need to revise the standard. Revised standard units. The total will be adjusted according to the actual quantity. What is the total actual quantity, actual number of units, which is equal to 4,500. If it is 4,500 in the ratio of 22:18, we have to adjust that. 22:18 is equal to 4,500 into 22 divided by 40 is equal to 4,500 into 18 divided by 40. Then now write what is the standard profit per unit. The method is mentioned is, which method are they asking us to use? They are not asking us to use the marginal costing method, but the question is asking us to use the individual units method. So it is not about the marginal costing, it is about the full costing. So we take 50 and 53.75. The solution will be the difference between these two, the actual units and the revised standard units applied at the standard profit. Is equal to the profit into is it favorable or adverse is what we have to look into. The actual units are more than the standard units, so this would be a favorable. Here revised is more, so it's equal to this would be an adverse variance. Overall, see, one is adverse, one is favorable. So find the difference. So 1968.75. So the adverse is more than the favorable. So it is more by 1968.75. So the sales mix variance is equal to Am I audible? No response today.
Yes, ma'am.
So would you to work out this one, quantity variance, sales quantity, profit variance for product S. So the previous question they asked, they didn't ask total, no, they asked only for product B. The product B is 26,250 favorable. If it is total, it is 1,969 adverse. But if it is only for product B, it is 26,250 favorable. I have done the total. So the answer would be 26,250 favorable.
Ma'am,
Yeah.
ma'am, I have a doubt. Actually, we got this 1968.75. Why we are subtracting, ma'am?
Which one?
That sales mix
Uh,
variance, ma'am.
one is adverse, one is favorable, no?
Yes, ma'am.
Mhm.
No, ma'am. I'm asking why we are finding the difference between the sales mix variance of product B and C, ma'am.
The total sales mix variance. That's what I said. I calculated it. In a flow, I calculated it for total, but the question is asking only for product B. So that is what I am mentioning. So because it is asked only for product B, if we do only for product B, that is sufficient. But to do product B also, we need to have all this table. This part, at least till here, we need to have. So I've done that in a flow that what is the total. If they are asking total sales mix variance, this will be the answer. But because they are asking only product B, the answer will be 26,250 favorable. I have done in a flow. I didn't realize that it's only for product B. The minute when I saw that in the next question they are asking only for product S, then I realized I went up.
Okay, ma'am. Ma'am, for the sales mix, we have to consider the difference between the units, ma'am, standard and the budgeted units. It's like quantity variance, no, ma'am. What is the difference between the two?
In a quantity variance, it is just one product. Mix is when there are multiple products, more than one product. So then we call it as mix. If it is just one product, it is only the quantity variance.
Okay, ma'am.
Mix is I told you that when there is more than one type. If it is a cost variance, more than one type of raw material for material, one type of skill set for labor. Okay, so that is mixed variance in material and labor. Here, in case of sales, they have sold more than one type of product. So then we have a sales mix variance. So here, 79 question, there are three different products. Okay, so they are asking us to find out what is the total quantity variance. So in that case, what did we do? We have taken it as the total quantity. But if it is a mixed variance for individually each one of them, we have calculated the variance, mixed variance. So for every, the point is individually. So here in the case of quantity variance, the overall part of it was calculated. The total actual number of units are 23,000. Total standard number of units are 20,000. Mixed variance talks about individually verifying that. So individually to verify that, first step is we need to make it even. These two things should become even. Then after that, adjusting the standard and finding out individually. Here we didn't do individually. We've done it as a total quantity of actual units and total standard units. We just took the difference between.
Okay, ma'am.
Question number 81. FF produces two products, product R and product S. The following budget and actual data was prepared for the period. So product R is there, product S is there. Find out what is the sales quantity profit variance for product S. Okay. I asked you to do that. So step number 1 is, what should we do? We should find out what is the weighted average profit per unit. That's the first step, isn't it? Just now we've done weighted average profit per unit has to be calculated. So let's start. Sales quantity profit variance for product S. How much will it be for product S? What will be the answer for product S?
Nil.
For S, it will be nil. Then for this one, then the actual is 2000 more. So
6,000.
6,800. For S, it will be 0. So if we are finding out the quantity variance, if they are asking very specifically, then 3.4 should be applied for the difference between the units, 6,000, 6,000, and 4,000 and 6,000 for R. R, it is 6,800. S, it will be 0. So this would be 2 into 6,800. It will be favorable. Overall will be 6,800 favorable, because S doesn't have any variance. During a period, Jones had the following budgeted and actual sales: product A, product B, sales budgeted sales budget, and then actual sales, and then standard profit per unit. Would you do this one?
Yes, ma'am.
Yeah, please. First, the weighted average profit per unit calculate.
Ma'am, is it 600 adverse, ma'am?
I don't know. Let me also put it. This is the total is 1,600 and 14. It is adverse only because say actual sales are less than the standard sales. So on that note, it will be adverse only.
Okay, ma'am.
Yes, 600 adverse. Here we are asked to find out what is the favorable sales mix variance. Sales mix variance. A museum has a new temporary exhibition which it has budgeted for the following sales: full price tickets and concessions. The volumes are given as 9,000 units and 3,000. So we can take these two to be as their products. That is the sale price of the first type of tickets, which is full price tickets, and the concession tickets. The number of units of tickets are 9,000 and 3,000 for these two categories. The contribution per unit is given as 9 and 4. The actual sales were as follows: the full price tickets and concessions are 12,000 and 8,000. So the total will be, standard total will be 12,000. Actual total will be 20,000. So because it is a mixed variance, step number one, we need to adjust what is the total standard according to what is the total actual. So that is the step number one, which we need to take it up. After that, take the standard profit. Now the standard profit given to us here is only the contribution per unit. So the standard contribution per unit has to be taken up. Okay, let's do this one. 89. We can name these two types of products. So product can be taken as full price tickets, and the next one is concessions. The volume or the number of tickets which are sold under standard. So let's put it as standard volume. We see it is 9,000 and 3,000. The total standard volume comes out to be as 12,000. But when we check the actual volume, actual number of tickets which are sold for these two categories, 12,000 and the other one is 8,000. So when we add them up, it comes out to be as 20,000. So what should we do? Step number one here is we need to revise the standard volume. And the criteria will be whatever is the total actual quantity, the same thing has to be taken in the ratio of 3 is to 1, because 9 and 3, no, 9 in 3 ones are 3 threes are, so 3 is to 1. So let's take 20,000 into 9 divided by 12. Next one, 20,000 into 3 divided by 12. Then mention what is the standard contribution per unit. The profits mentioned are 9. Then we have it as 4. Find out what is the difference between the actual volume and the revised standard volume. Apply it at the standard contribution per unit or standard profit, whatever profit is available. So take that and then multiply. Individual item by item we have to do. Individual units method in individual items. So take the difference as 12,000 and 15,000, 8,000 and 5,000. So this one is an adverse variance because the actual volume is less than the revised standard volume. And for the other one, it is a favorable one, which is equal to 4 into, this is 8,000 minus 5,000. And this is the favorable. But, okay, they are only asking for concession. Concession, 12,000 is the favorable one. It's only for concessions they are asking, not the total one. So concession is 12,000 favorable. Concession tickets is 12,000 favorable. Tomorrow onwards, for the rest of the week, we will have it as a 2-hour session only. There was a clash with another class today, so there was no way that I could have adjusted that. That's why the class timing was only for 1 hour for today. I think henceforth also every Monday to it, maybe it would be only for 1 hour. Let's see how we can take it up. But the remaining days in this week, we will have it as 2 hours. Question number 90. There are 3 products, product A, B, C. The total favorable sales mix profit variance for the period using the weighted average method. Um, let's do weighted average. There are 3 products.
Ma'am,
Yes, ma'am.
I think we've done this sum before.
Did we?
It is the same as the 79th problem.
Okay. So it's a repetition. Okay, let's skip this one. Data is also same, no?
Yes, ma'am.
How come they have given like that? So let's visit the exam kit. So till 90, we have finished doing all the questions under variance analysis. From 91, I didn't put them in the Excel file because again, they are touching on the, you tell me if we have done, I don't remember. 91, did we do? Let me check in the file. I think we have not done 91. So 91 onwards, these are again cost variances. We see for 91 is about operational labor efficiency variance. The 92 is also talking about overhead variances. From overhead variances, we are asked to calculate what is the actual production. 93 is again quantity of material variance. So only 3 questions are there. If we do these 3 questions, we would be done with the variance analysis part of it. So I'll put the, you added me into the group, no? So this variance analysis, the Excel file, whatever we have done, I'll put this in the Excel group. So you can revise that. So tomorrow, even if 1 or 2 questions are remaining also, tomorrow we'll finish that and then start with the budgeting part of it. So if we do variance and budget, variance analysis and budgeting, that will be the major part of the syllabus. Then we have another 2 topics, and that will be the end of the syllabus. I'm carrying these 3 questions to the Excel file. Let's see how many ever we can finish it by the end of this class. If anything is pending, we'll work it out tomorrow and then start with the budgeting topic. Ninety-first question. Operational labor efficiency variance. Operation B in a factory has a standard time of 15 minutes. The standard rate of pay for operatives is 10 hours per hour, $10 per hour. The budget for a period was based on carrying out the operation 350 times. It was subsequently realized that the standard time for operation be included in the budget did not incorporate expected time savings from the use of new machinery from the start of the period. The standard time should have been reduced to 12 minutes. Operation B was actually carried out 370 times in the period in a total of 80 hours. The operatives were paid $850. Labor efficiency variance. The labor efficiency variance talks about the number of hours which are used, the actual hours used and the standard hours decided, the difference between the hours applied at the standard rate of the standard rate of labor. Standard rate of labor is given to us as $10 per hour. we have the actual quantity, the actual number of hours, the total number of actual hours are 80. But there is something about the standard. So the standard time for one the operative is 15 minutes. Okay, 15 minutes. The budget for a period was based on carrying out the operation 350 times, but the actual operation which was carried out was 370 times. So we need to adjust the standard time for the actual output. So that has to be adjusted. After that only the variance has to be calculated. So let's start with that. Question number 91. Because the quantities are given as the number of hours is what is the time period mentioned. So the standard rate also should be taken as standard rate per hour. The standard rate mentioned is given as 15 minutes. So convert that into hours. Standard rate per hour into, then we have the budgeted hours minus the budgeted hours. Don't make a mistake of calculating it for the budgeted quantity, the budgeted activity. Budgeted activity is for the operation taken up to be taken up for 350. The actuals are the total actual hours are to be taken, which are for 80 hours. Okay, so let's calculate this one first. The standard rate per hour, three variables are there. Standard rate per hour is equal to, it's given as 15 minutes for one operation. In terms of hours, it will be 15 divided by 60 minutes. So that will give us 0.25 hours. After that, we have the budgeted hours to be calculated. Budgeted hours would be, the actual operations are 370 times. What did I do? I'm really sorry. Start. This is already given as dollars. I'm really sorry. I made a mistake here. I'm really sorry. What am I thinking? Budgeted hours is equal to, the budgeted time is 15 minutes for one operation, but that converted into the number of hours. So it should be 15 divided by 60 into 370 is equal to. So how many hours? Let's just check that one. Is equal to total 370 into we see that it is 15 minutes. 15 minutes divided by 60. So 92.5 hours. Then we have the actual hours given directly as 80 hours. Find out labor efficiency variance is equal to, the rate is $10. 10 into the difference between these two. The standard time allowed is 92.5 hours, but the actual time which was taken is only 80 hours. That gives us the value as Is it favorable or adverse?
Ma'am, it should be favorable.
Did I make mistake?
Ma'am,
Uh,
actually, I have a doubt, ma'am.
Uh-huh.
In the budgeted hours, why can't it be 12 divided by 60, ma'am? Because they have said the standard time should have been reduced to 12 minutes. ma'am.
Okay. 12 only. It should be 12 only, dear. I'm really sorry. It should be 12 only. You should have stopped me then only. No? So, labor efficiency variance is equal to minus 74. Is it an adverse or a favorable one? Is it adverse or favorable?
Adverse.
Why?
Adverse, ma'am.
Why?
And the
The
budget is lesser.
actual hours are more than the budgeted hours. It's simple. Only two more questions are remaining. So tomorrow's class, we will solve these two numerical questions. I'm assuming you will take up the theoretical MCQs. Okay, you please work it out. Come till the end of the semester. At the end of the semester, if we um, still have time, I will take you through those things also if you have a doubt. But let's first we'll concentrate on working out all the numerical questions from the syllabus, from the examination kit, as many as are there. Um, Roughly around 240 MCQs are there altogether, both numerical and theoretical questions. So let's take up the numerical first, and then kind of a revision. We'll go through the theoretical ones also. Okay. I'll see you tomorrow at 4. Okay.
Okay, ma'am.